Hi guys, it's Thomas here from COTBase.com. Welcome to this week's Commitments of Traders review. Today we're going to have a look at the 49th COT report of this year, and as usual we're going to start off with the changes in commercials positions. We have the S&P 500 on top of our list with a 33% change in commercials positions. You can see that change over here. It is a bearish COT change signal. It is one of the largest in the past 52 weeks. So we can expect a bit of a decline in the market in the next couple of days. Now, jumping to a 5 years chart, you can see a wider perspective about the market and see how extreme it is. And you can see that we have again came back to bearish extreme levels. Now, the last one was back over here in the beginning of this year, and you can see it was an effective signal. We had a bit of a decline, but it did not change the trend. So it's still upwards, and of course we have to be very cautious about any downwards trade in indexes right now. But nevertheless, the extreme is there. It is bearish and tells us that prices should eventually turn down. Copper is our next market. We have a 29% change over there. Of course, this is a bullish COT change signal. Jumping to a 5 years chart, you can see the extreme, which is we're still closer to bearish extreme levels. We're moving away from those levels, and you can see clearly that this extreme signal a few weeks ago was actually a very effective one, and prices have declined from there. Now the big question is it going to continue? One thing's for sure, bullish extreme levels are far away right now. Gold is our next market. The same COT change signal over there, bullish 29%, possibly pushing prices higher in the next couple of days. And jumping to the 5 years chart, you can see that we are maybe a little bit closer to the middle. I mean, the middle meaning between bullish and bearish extreme levels. So the last major COT extreme, I was just saying bearish, was actually back over here, and it's still in effect. So we're still seeing prices declining. Okay, moving on to large speculators COT Extreme. We have crude oil on top of our list with all-time COT Extreme in large speculators and in commercials as well. Of course, I told you this in the last review. We have to be cautious about these all-time extreme signals in crude oil, of course everywhere else as well, because they may be present in the market for many weeks or even months before the price reacts to the signal. And that may be the case in crude oil as well. But we have seen a bit of a decline last week, so who knows, maybe that was the top and we're going to see lower prices coming. So huge extreme, that's for sure. We've never seen such an extreme in the past in the crude oil market. And the next market is natural gas with a 67 report extreme in large speculators, the exact same extreme in commercials as well. And as you can see, that means we're more or less in between the two extremes, the bullish and the bearish. Sorry, the other way. So that's the bearish, and that was the bullish extreme. And that means the last major extreme, which was over here, is still in place. It's still affecting the market. We're still seeing lower prices. We have not reached a significant bullish extreme that would tell us that the decline should end. So that's that. And last for this review is the S&P 400 with a 44 report extreme in large speculators. But if you look at commercials, you may see that all-time signal over there. So of course it's a similar picture as we had in S&P 500 due to the correlation of these markets, obviously. So both of these markets is in a bearish mode right now, at least extreme wise, that's for sure. But as I said before, caution is strongly advised. These markets, as you may see, are in a very significant rally mode right now. Okay, that was all for this review. I hope you enjoyed it, and I hope to see you next time. Take care. Goodbye.